It might not even can't go like this for real, but this is still an example. So you might have got $3,000 in earned income tax credit. You qualify for it based off your income, but you didn't pay any taxes. So guess what? The IRS got to get their money back. They're going to get it back based off the tax liability, or if you're self-employed, your self-employment tax. So what happens is all the different credits are added up and into this thing on the tax form that's called payments. And those payments is a total sum of the federal withholdings you had, the child tax credit, the additional child tax credit, the earned income tax credit, the education credit, whatever those total sum of all of those things that you qualify for, they're called payments. So it's like that's money you got in the bank. Then based off how much you made, how much taxes you paid, what your deductions was, and what the IRS is saying, okay, this is the amount of taxes you should have paid and you didn't pay enough. What they do is they deduct that from the total sum of the payments, and that's how you get the refund. So you might have still got the EIC, but because you did not pay enough in taxes, the IRS is going to take the amount that you did not pay enough in, and they're going to reduce it from the payments that they've given you, and that's how that works. So you can qualify for the child tax credit. You can qualify for the earned income tax credit. You can qualify for the education credit. But if you have not paid enough taxes, or you're walking away with what's just called a tax liability, or you self-employed and you have not paid your self-employment taxes, what happens is those credits are reduced and you don't get them in your pocket. The IRS take the portion that they're going to take back, and then whatever's left, that's what your refund is. So a lot of people be like, oh, I didn't get that credit. What about this credit? And you're thinking you didn't get the credit, and you actually got the credit, but you didn't get the actual money in your pocket because you possibly didn't pay any taxes during the year and you did not meet your tax liability. So that's kind of how it works. So again, just to finalize everything, how much you get for your dependents, again, is based off your income, the amount of dependents you're claiming, and the different credits that you qualify for. If you qualify for like 3 of them, depends on the income. It's going to depend on how much of those credits you qualify for. And based off those credits, that's how your refund is determined. Now, a reason why a lot of people are not seeing bigger refunds, even in the mess of the pandemic not being here, the credits for the pandemic not being here, is because unfortunately a lot of you all are not paying your federal tax withholding, and the money that you possibly would have got if you had paid some taxes in your refund to make your refund bigger, you're not getting because you didn't pay any taxes. So that's making your refund a little bit lower as well. So don't believe the hype when people are trying to sell you on you getting a certain dollar amount on your dependents. It doesn't work like that. It never has worked like that. And nobody can tell you what you're getting back unless they put your information into a computer and let it calculate and make sure that they're answering the proper questions to make sure that you qualify for those dependents based off the law. That's how the amount that for your dependents is